Welcome to the Fear and Greed Afternoon Report for Thursday, the 23rd of March, 2023. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1. The S&P ASX 200 finished the day down 0.7% to 6,969 points. The materials stocks led the way lower, while the energy and financials also underperformed. Around 3/4 of the top 200 ended the day in the red. The big miners struggled, led lower by Fortescue Metals, which dropped 3%. The banks were lower, with National Australia Bank down more than 1%. Macquarie Group finished off closer to 2% lower. Others to underperform include QBE Insurance, Cochlear Mineral Resources and South32. It was the defensive stocks that outperformed, companies like CSL, Wesfarmers, Telstra, Woolworths and Coles. And bond investors are now confident that the Reserve Bank's tightening cycle is over following a rate hike in the US overnight. Bond markets have priced in no interest rate hike in 11 days when the Reserve Bank Board meets. But market economists disagree. They reckon a rate rise is still on the way, 25 basis points. Story number 2, the Federal Reserve in the US lifted the benchmark interest rate 25 basis points this morning, but signalled the central bank was thinking differently about future rises. The federal funds rate target range is now 4.5% to 5%. That's its highest since 2007. The phrase ongoing rate increases was no longer in the communique following the increase, something Fed Chair Jerome Powell noted. The phrase has been in every statement since the rate tightening cycle began. Powell said that some additional policy firming may be appropriate. The Fed also lowered its economic growth forecasts. The announcement hit Wall Street with the broad-based S&P 500 down 1.7% and the tech-heavy Nasdaq finishing 1.6% lower. The news also sent cryptocurrencies lower after their fairly strong run in recent sessions, and the Aussie dollar got a boost, or more correctly, the US dollar fell. The Aussie is currently trading above 67 US cents. Story number 3, Australia's fleet of MRH-90 Taipan Army transport helicopters has been grounded after 2 soldiers suffered minor injuries when their chopper crash-landed into the water on the New South Wales south coast. 10 personnel were on board the helicopter as they conducted nighttime counter-terrorism drills at Jervis Bay when it made an emergency landing about 9 p.m. last night. Defence Minister Richard Marles said that the main rotor lost power and praised the crew for a textbook response, managing to ditch the chopper without loss of life. He said one soldier swallowed seawater while another bumped their head. An investigation will be launched into the cause of the incident. The MRH-90 helicopter has had trouble with its operations in the past and been grounded 9 times previously. The government earlier this year said it would replace them with US-made Black Hawk choppers at a cost of about $3 billion. Story number 4, Australia's biggest pharmaceutical retailer, Sigma Healthcare, made a small profit during the past half year, but warned of tough times ahead with acute labour shortages, higher freight and energy prices, inflation, and interest rate increases. The group has paid back debt in response to the Reserve Bank's 10 rate rises, and that hurt earnings. Sigma made $1.8 million for the year to the end of January, while revenue was up 6% on the back of purchases of rapid antigen tests and COVID-19 antiviral medication. Freight costs are a big item for pharmaceutical wholesalers because under the Community Service Obligation arrangement with the federal government, eligible distributors must supply the full range of PBS medicines to pharmacies anywhere in Australia within 72 hours, regardless of location or cost. They get subsidised by the government, but it's still a massive logistical exercise. And finally, story number 5, Soul Patts, as well as associated company Brickworks, both reported today. Soul Patts is an investment company and its half-year profit jumped 167%. As a result, it boosted its dividend. Soul Patts is a major shareholder in Brickworks, and that company posted a jump in profit. Chief Executive Lindsay Partridge said the brick-making group continues to experience strong demand, but a sharp slowdown in housing construction and renovations is likely towards the end of 2023, with a backlog of work stemming from tradie shortages to provide a short-term buffer of about 6 months. That's it for the afternoon report for Thursday, the 23rd of March, 2023. Don't forget to hit follow on the podcast and find Fear and Greed on LinkedIn, Instagram, Twitter and Facebook. Join Michael Thompson and I tomorrow morning for the Fast 5 by Fear and Greed, the top 5 business stories you need to know in just 5 minutes. I'm Sean Aylmer. Enjoy your evening.